Hey, good afternoon. This is Julie. It is Saturday, May 12th, and the markets are closed. I want to go over a couple of things regarding the templates that will help you navigate the markets, hopefully using these BloodHound tools. First is the market analyzer, of course, gives us the overall snapshot of the market. You've got on the right-hand side, the far right, the higher time frame trend on the weekly, daily, 60, 15, and 5-minute charts. Those trends are taken and an amalgamation of that, a synthesized level is put inside this one solver. So we can see if the market is trending up or down overall. So you see for crude, you had the weekly, daily going long and the 60, 15, 5 going short. So there's a 0 in there for the higher time frame trend. Not enough condition for me to go one way or the other. But here on the lower time frames, on the lower two, the 6C and the GC, gold and the euro, you can see that the euro higher time frame trend is red, except for the 5-minute is green. But that is enough to give me a overall red trend condition. And that weekly, daily on the gold contract is mixed, but it's still good enough to give me a down trend condition. So this is my HTF is my higher time frame trend little solver. I have a super trend solver, and then I have a super trend momentum blend on the 60-minute, 15-minute, and 3-minute. And if you've been to my trading room, you know that I look heavily on this 3-minute momentum, super trend momentum, to try to time my entries, as well as that 15-minute range breakout. And I always like to be trading above or below the prior day high and low if I can. So like crude was trading below the low and the range, um, but did not quite have that higher time frame trend, signifying a much longer um, extended run for it, just like a daily run. So this is very beneficial, and you can also get your ATR information as well as your daily high-low fast price and other information. Here's the gold chart. I'm also, and here's that 3-minute St. Mom setting. This is my MACT Market Analyzer chart template setting. And here's that 3-minute mom that I'm always looking for on the 3-minute chart, up or down, that helps me get in the market up or down. And this is why I like trading with it so much. Really helps me time my trades. So when I put it together with my linear regression, here's the linear regression all, meaning all my conditions have been met. Here's the largest overall trend condition. Here's the second largest. Here's the third largest. And here's the smallest trend condition. You see how choppy it got on the bottom here. So when you put them all together, you can see the meat of the move. That's the chunk of the good part. But sometimes you can still get value out of one of these other settings for the minute level that you're trading on. So a 15-minute level, you can go through these settings and find one that you like overall, or require that all of them be met. And I also have a RTH setting. So for gold RTH, this is just the regular trading hour in the daytime session. Up or down would tell you when to get involved in the market. And then when we get that indication that it's going up or down on the RTH session, sometimes you just don't have a trade during the session at all to trade. But when it does run, it's pretty good indication to go into the market at that time and try to grab a runner. But otherwise, since these markets have become so 24/7, you can choose one of these other settings to trade and match it with your 3-minute Saint Mom or higher higher time frame with range, or match one of these other conditions to try to get inside um, the move and find a market that is moving. So Saint Mom is one that I trade a lot, that three, and especially on a 3-minute chart. I also have these other templates to get involved in the market with, up or down, and this allows me to take a trigger, wait for a pullback to a level, and require that it reach that level before resuming back in the direction of the downward trajectory for a short or upward for a long. So we know our trajectory line, and we're just waiting for these to come in and hit the trigger that it would allow me to take a trade. Oops. And the guys in the trade room were asking me, well, can you require it to hit the trigger, the higher trigger, before coming down and triggering the lower trigger? And the answer is yes, and I have figured out how to do that. And I'm very, very happy to let you know that I can do it one of two ways now. I can allow the touch on the upper trigger to be performed and enter you on two contracts, one at that upper trigger and one at the lower one at the upper trigger entry, thereby saving you that risk between those two entry posts and allowing you the maximum reward to the trajectory. So you would enter two now at this upper trigger and come down and take it off once you reach your profit target as these new bars open. Or if you would like to delay your entry, get your signal on this entry, but delay it um, um, for one contract at the 21. um, I'm trying to get that to work that out, but I still haven't gotten it to work. Um, but you can set it so that it only enters one contract instead of two. So if you don't want to trade two at the 50, but just the one, I can set it up so that it would only trade one contract, and I can show you how to do that. But the entry would be at the 50, I believe. I can't get it to come back down to the 21 to trigger after the 50's triggered. I'm still I would like to do that, but I still have not been able to successfully get that to work. So, um, but that's I think the risk is still mitigated by taking it at this upper level, and I can do it either from the either one of these top two triggers. So that is gold. Let's take a look at the NASDAQ. It was not able to get through its gap day from March. The E-mini and the NQ are trading, correlating just about the same going into these gap levels. And the steam sort of came out of the rallies for all the markets, including gold, on Friday. So I'm expecting some pullbacks next week. Here's the NQ, and you can see that it tried several times to get on top of this trend line, but was never able to do it. The gap line, and here's the upper gap up here by 70.40. So that's a failure, gap line failure, and off the daily. Let me show you that. Okay, here we go. And that gap was way over here on March 19th. So we haven't been able to get through that gap and or close it up here from that Friday before, March 19th, March 16th. So the 16th through the 19th gap period we failed at. So I'm taking this as a bad omen for next week, and assume that we're going to come back here and hit 68.96. If we do manage to punch up through it, then there's, the opportunity to keep going and hit this volatility level. But since we were not able to close above it on any of these markets, the Russell, the E-mini NASDAQ, or the E-mini S&P, I'm thinking that this is probably going to roll over, is my guess. But it's a good thing I don't have to guess anymore. I just trade the um, market that's in front of me on the indicator. And let me show you how good that can be, just by putting on a higher time frame trend, and that's the amalgamation higher time frame trend by itself. Um, and it allows you to stay out of the market when you don't want to be in there, and just see these, trading opportunities for what they are. Stay out, stay out, stay out, and then it shows you when the good opportunities are there. It's when that higher time frame trend is trending. So many different ways to sort these MACD chart template indicators, but I'm trying to get them so that they actually show me some value, um, and let me know when the markets may be more conducive to making a move. And I find that often that it works. So that's why I have them on my market analyzer and on my charts. So otherwise, we'll just trade what's in front of us and try to execute these trades on using the tools that we have. We put this back on a 59 and learn to process the trades. I had a couple of good trades this week, some really good trades, some nice trades using the high-low 2, and learning to stay out of the market when the conditions aren't matching, and that is the 15-minute momentum with the 3-minute. And I want that higher time frame trend to be on my side too. And always this Saint Mom 3, try to trade in that direction on these pullbacks. So when the market pulls back here, you're not getting a signal on this chart, but you'll be at the 50 usually to pick up a trade, 50 or the 89. Okay. All right, come see us in the trade room, and don't forget next week we've got, let's take a look at the calendar this coming week. Monday, there's not going to be really any data to talk about. FOMC members talking. Pound stuff overnight, euro stuff. So Tuesday overnight is a good night to be trading. Then we've got retail sales, which will show some inflation, business inventories. So Tuesday would be good trading day. More euro stuff overnight for Wednesday. And then Thursday is real estate day. And then we've got some manufacturing industrial production numbers, crude oil inventories. Thursday, Philadelphia Fed manufacturing. And Friday looks like a very nothing broker day on Friday. We'll have an extra day off on next Friday. So going to be a short week next week, but with some Euro overnight trading and some good early week, Tuesday, Wednesday, especially um, RTH trading hour sessions. So I would expect Monday for sure to fall back on these index markets since it wasn't able to get up to the gap. And so that's what I'll be looking for. And I'll be then looking at these levels, the prior closes and the prior lows, and look to see if the market settles back in here somewhere and then tries to rebase for another push up through that gap line. All right, guys, maybe that'll happen on Tuesday, right, with our retail sales numbers. That would be nice because the numbers have been fantastic. So just trying to learn how to trade with the linear regression and then enter the market when the condition sets itself up using the lower time frame 3-minute chart and entry with the software. Thank you so much. Y'all have a good day.